5 crypto innovations that the financial industry is keeping an eye on. Conversations around cryptocurrencies are becoming more heated as digital assets become an essential component of the national economy. With the Biden administration recently issuing its first formal pronouncement on cryptocurrency in the form of an executive order and the Fed issuing a 40-page analysis on the possible impact of a US digital dollar, momentum is rapidly growing. Here are 5 major developments that the banking industry has been keeping a close eye on. Number 1. The proposed crypto law has bipartisan backing. Republican Senator Cynthia Lummis, a significant supporter of the crypto industry, has received support from at least one Democrat in a recent campaign for new legislation on digital assets, which would cover banking, taxes, privacy, and consumer protection. Senator Kirsten Gillibrand of New York, a member of the Senate Agriculture Committee, which controls the Commodity Futures Trading Commission, said she is working with Lummis to present the new legislation in the coming weeks. The work we're undertaking will be a very complicated and intensive assessment of various parts of this industry, Gillibrand added. Number 2. Biden's crypto decree is met with cautious excitement. The White House's first formal pronouncement on cryptocurrency drew a good response from many in the financial industry, but the outcome of President Biden's executive order remains to be seen as a plan for a plan. With the Treasury Department and other regulatory authorities on notice, it is now time for critical stakeholders to make their case for influencing the final regulation and policy. Advocates for digital assets want regulation to increase trust, but banks want clear rules of the road. To be regulated is to be legitimized, said Josh Lipsky, senior director at the Atlantic Council who previously worked at the IMF and the Obama White House. So it's a matter of who will be on either side of that, and what those regulations will look like. Number 3. The Fed is waiting for a clear government order on digital money. The Fed would not issue a central bank digital currency, CBDC, without the explicit endorsement of President Biden and Congress, the institution declared following the release of a 40-page analysis into the potential repercussions of a US digital dollar as an online equivalent of physical cash. The Fed report does not advocate for any particular policy solution, but it is a critical step towards a CBDC, which is likely to result in considerable changes to the US financial system. While the agency is excited to discuss the impact of a digital currency with important stakeholders, the study states that progress towards issuing a CBDC will ultimately be dependent on clear support from the executive branch and from Congress, ideally in the form of a particular authorizing law. Number 4. A Democrat-led draft bill attempts to define stablecoin rules. Representative Josh Gothema, of the House Financial Services Committee, is leading a congressional Democratic movement to draft legislation for the first federal rules and practical protections controlling stablecoins. While the draft legislation has not been officially disclosed, its elements include restrictions on which institutions can issue stablecoins and the establishment of an insurance fund administered by the FDIC that would cover losses incurred by non-bank stablecoin issuers. Number 5. Concerns have been made that cryptocurrency will be used to bypass sanctions. Senators Elizabeth Warren, Mark Warner, Sherrod Brown, and Jack Reed have expressed concern that Russian banks and billionaires could use cryptocurrency to avoid the world's increasingly tough economic sanctions. The senators asked Treasury Secretary Janet Yellen in a letter to verify that the cryptocurrency business complies with sanctions and that digital assets and alternative payment platforms are not used as a new way to mask cross-border transactions for illicit purposes. Given that digital assets may be used to circumvent the traditional financial system, it appears likely that sanctioned bodies are already attempting to employ crypto to avoid being penalized by the limits. Can they, however, be stopped?